Hello traders and welcome to another technical analysis video brought to you by Orbex.com. You're now surfing the waves with Richard. So what I want to do today is, as usual, I'm going to follow up on a previously posted article. And also, I'm going to follow up on the previously mentioned ideas and my thoughts, right? Because lately I've been talking a lot about the possibility for the VIX, the volatility index, to cause a spike or start of a spike. So it does seem it is showing signs that volatility could be back, and with it the bears, like the fear period, right? So basically complacency period and greed period for stocks, indices, etc. could be over now or almost over. We will see, but we will check out the charts now. Besides that, I do see some possible reversals occurring in the market, and with that, I'm going to go on the charts, obviously, to expand on this and to basically see what are the probabilities for this to possibly occur. Now, also we'll give you a live example on something that I'm seeing, so like a fractal pattern in which the patterns could be repeating themselves, right? So this will be done on the euro US dollar. There is such a fractal pattern occurring, possibly, of course. Now remember, everything that I'm about to do or say or show you is not designed to induce or influence you in any way, and should not be taken as an investment advice, right? So without further ado, let's just jump on the charts. Firstly, I'm gonna start with the daily charts on multiple markets, and then we're gonna go intraday and follow up on the previously posted article and see basically the swings, how they unfolded, but also do some analysis and explain to you guys. And basically together we're gonna walk through this, these swings and try to find the best probability, the best possible scenario for us to move forward within the next trading week. So today is Friday the 17th of August. It is 4:20 p.m. Eastern European Standard Time. So I'm on the dollar index on the daily chart, and what I'm seeing is a very complex structure on the dollar index. Still corrective in my view right here. So I know that previously I've been I've been looking at this structure a bit bearish, and I was actually expecting a breakout right here. That did not occur, right? And in my personal opinion, running flats are actually the hardest to decipher, the worst patterns possible, right? Because they keep on going, and you never actually know. But if I do move towards the oil, right? Let's say crude oil, WTI here on the daily chart, you guys can actually see that even though it is rising like that, they still, so at one point, they still deliver the drop towards the channel, right? And as you guys can actually see, if I do draw a channel right here, there's a possible breakout happening right here, yeah? And I will expand on this later on, but let's get back to the dollar index and basically analyze this. So the way I'm labeling the dollar index on the daily chart is in an A, B, and a C wave with a 5 wave sequence, right? The reason for that is because I am not really satisfied with labeling this as a first wave. This is because it has a 3 swings sequence, okay, and not a 5 swings sequence, and not even a leading diagonal to say, one. So if I would label this as a 1, 2, and then this could be the 3, and then this pattern to be the 4, we will be left with this as the 1, 2, and then this 3, 4, and then the last fifth leg, and then of course the ABC corrective. However, the pattern does not tell me that that's the best possible scenario. So therefore, I'm labeling it in a running flat complex structure, more exactly a double free, right? In a W, X, and we'll see if the Y actually occurs. And the reason why I am having this thought is because I do see some patterns on the euro, on the pound. So I'm gonna go on those patterns. So let's say, for instance, recently I've been quite busy with the with another report for you guys, which is gonna be available very very soon. So let's say this is when the pattern, let's say on the 6th of August, right? This is when the pattern was actually pointing towards the downside. Now it it did not, right? So it had this rise. The way I'm looking at this rise is in a false breakout, right? This doesn't necessarily change the pattern. It only prolongs it, right? It only delays it. So as I said, I'm labeling this corrective pattern in a rising channel, in a very dangerous rising channel, because this can actually turn out to be either a running flat or an expanded flat in which the Y wave can actually go even lower. So this could be like this, right? So the dollar could indeed um, have that drop occurring, right? So only a bearish divergence would be needed, but we do have one right here, and I'm gonna zoom in later on on the 2 hour chart. Intraday I'm gonna go on each chart. So let's move on. Right now, gold, since since the time since the time I mean on this report, I was actually expecting gold to actually drop some more, right? But it dropped a bit more than I could have. Anyway, the more than I was expecting, but the level was indeed mentioned right here, right? So 1160. So we do have a possible reaction right here, and the way I'm seeing this entire structure and the way I'm labeling this, the gold, yeah, XIU USD on the daily chart is in a cycle wave A black, yeah, and then a complex, very very complex structure, right? During President Trump's election, right? During the US elections, right there. And first leg was labeled as a W orange primary scale, primary degree, right? And then, because this structure is correcting the previous move, this structure is correcting a correction. So it is unfolding as a double free as well, right? In a sorry, in a WXY, right? This is a flat. So right after that started falling. So it has obviously something to do with the February VIX spike, yeah. And we noticed that when the VIX actually spiked right after that, gold actually fell. Not only that it fell, but it broke this rising channel, also broke the weekly trend line, which is coming back from December 2016 lows and December 2015 lows, right? When gold delivered impressive bullish swings. Now, this was not the case right here, right? Because we have a breakout. So, what I'm suspecting is gold to retrace in a free wave sequence for this X and further downside possible. This is because in order for us to complete this pattern, I'm labeling this pattern as a flat correction, right? We need, like, let's say this is the dominant trend, this A wave, and then A, B, C. It's not an ABC, it's a WXY. But anyway, the point is that in a flat correction, free wave sequence would be needed, right? So I'm not entirely sure. It's very hard to tell if this would drop directly, right, towards 1115, which is this 100% fib from WNX, in order for us to determine 100% for the Y projection, right? And for the B, so therefore it will be A, B, C, right? And of course, this would be expected for the next move, in my personal opinion, right? But until then, let's see what gold can actually provide. So from the top right there, yeah, I'm labeling this as a triple free W X, yeah, and then A, B, massive B right here, and then 1, 2, 3, 4, and then the fifth leg, right, in an ending diagonal for this blue C. Sorry, okay, for the minute C blue. So this way, ending the Y, the minor Y, and also possibly ending intermediate W turquoise. So let's say, for instance, should this be correct, and if this is true, we don't have a bullish divergence right now, yeah, but neither did we have in December 2016. But on a lower time frame, we do have signs, and the lower time frames actually tell me much more. I'm gonna move on to those, but let's just continue here. So on the bottom line, what I would expect is a corrective pattern somewhere around here, possibly retesting this weekly trend line before another sell-off would occur, right? So let's move on. Silver, again, same thing. It's like gold, except that the pattern is way too complicated, much more complicated than the gold structure, right? Because we have a triangle right here. This is a triple free pattern, a WXYXZ, right? So the way I'm labeling this is with this triangle right here. Um, in order for us to complete the C, we will need an ABC, right? So I'm suspecting that this could be the end of the A, right? Which was disclosed right here with the level in the report that I done. So we do have a bounce off right here, and possibly this could go towards a B wave, not like that, but in a complex structure, of course, maybe like this, and then this B, so we can have a proper structure right there, and a possible bears returning, right? This will take some time, of course, but what I do know is that these levels do reflect so points of interest for silver bulls, right? Next, crude oil, same thing. In the report, in the analysis, I've been mentioning the possibility for crude oil to actually drop on the August 6th, and it did start the drop, right? We'll see how much this would pan out. And the way I'm labeling this is in an A and basically in a B wave, either in a running flat or an expanded flat. But the point is that as I shown before, pretty much it looks like it could be an expanded flat, in which case the C wave would go beyond the beyond the end of a wave A, right? So, well, possibly something like this, right? Towards the 200% Fibonacci extension from A towards B, either 161.8, 100% was breached, right? Because this actually went lower. So this is a good sign that 150, 161.8 levels would be in focus, right, or next. But still it will be a running flat, right? So we'll see if these will be the levels or these will be the levels, right? As you can see, this is a vibration zone with tops and bottoms, right? And in which multiple swings actually occurred and decisions actually occurred, right? So we'll monitor this. I will zoom in to the 2-hour chart, 4-hour chart, and then we'll see much more. Now, this is the interesting part on the euro dollar, right? Because this pattern, I'm labeling it as an A, B, and then an impulsive bearish 5 swings sequence in the C leg, right? So five waves down here in minute 1, 2, 3, 4, 5 blue and light blue C, right? And thus ending this intermediate degree red A. Now, right after that, there's a complex structure going on right here, and for that, I'm gonna do something. Now, the way I'm labeling this is the first move up in an A and a complex structure in the B. Because remember, this structure is correcting this structure, but also this structure is the start of the bigger correction. Therefore, it's a correction. So B is correcting A, but it's actually correcting another correction, right? The start of a correction. So it's a conflict of degrees, conflict of corrections. So therefore, I'm suspecting that this is a complex structure, more likely either a B wave or an X wave, right? And this could be in the menu. And the reason why I'm saying this is because there's a fractal pattern going on right here. And for that, I'm going to do the following thing. I'm going to go on the euro chart on the weekly, yeah, weekly time frame. So there's something interesting happening because this pattern pretty much looks as this pattern right here in the B wave, right? So what I'm gonna do is I'm suspecting that the pattern is reoccurring, right? This is how the market actually moves in a fractal by it is fractal by nature, right? So notice that after this pattern, the euro dollar actually started a bullish sequence, an ABC with a C leg, sustained C leg, right? So what I'm gonna do, I'm just gonna copy that, right? Copy that pattern, and yes, let me just put it right here. I'm gonna copy it and move to the daily time frame right there and paste it, right? So let's see. Now, now that I have it, I'm gonna put it right here and right, and let's just analyze this thing because it's very the pattern is very similar, right? What I'm seeing is basically, let's say for instance, in this pattern, we have a move up, yeah, we have a move up, then we have move down and then move higher, move down, move higher. Then we have a move down, which is going right there. We have a move down there. Then we have a move up, yeah, not going higher than the previous high. This is it. Now a move down and then followed by a complex or a triangle, something complex right there. Move down and a triangle, something complex. And then another move down. And this is it. And remember, after that pattern, euro started rising. So I'm suspecting this pattern as being a fractal, right? Repeating, because the market moves in patterns. So due to that, I do believe that euro could be ready for a bounce, right? Hence the reason why I posted this idea right then. I was expecting something lower, but it did go lower than I was expecting. That doesn't necessarily mean that the pattern I mean, the setup is invalidated. No, not at all. It's a wave B, right? Or a wave X. So in other cases, it is allowed to go lower than the start of A. So it's fine, right? The way the the main thing that's missing is another piece in order for us to complete this pattern, right? So on the bottom line, the market could be ready for some reversals. Could be ready for some reversals. And I'm suspecting a bullish run on the euro in the next few weeks, right? Medium term. Looking on the pound US dollar on the daily chart, I'm labeling this entire rise, yeah, after the flash crash right there, let's say October 2016. I'm labeling that as a triple free in this W, right? W turquoise cycle wave. Now, right after that, it started falling. So I'm labeling that as an A complex right here, B, and an ending diagonal in the C leg, in which the first leg is the longest wave and the strongest typical ending diagonal, right? And one in a descending channel, right? 1, 2, 3, 4, and then fifth leg. Now notice that the 61.8 was actually um, touched and or exceeded. So this leaves me to think that even so, we do not have a proper bullish divergence on the daily chart. However, if this would do, I mean, some sort of correction and then one more leg down, I'm pretty sure that that's could be a possibility, right? So it needs to be monitored on the daily time frame. So I'm suspecting the same thing on the pound actually, or let's say a bullish corrective one, which could actually reach 1.35 as well, right? In a corrective piece, not over the day like tomorrow, but that is a possibility. Moving on to the um, dollar yen. I'm suspecting like with the VIX possibly spiking, it is showing considerable signs of doing that. I'm suspecting the indices, US indices and global indices continuing that corrective pattern and possibly having massive um, falls, massive sell-offs, just similar to the one witnessed in early February 2018, right? And during that, I'm actually expecting a powerful yen, and I'm quite curious to see what happens here at this trend line, because you see the dollar actually, this cannot really be labeled as an impulse, right? I mean, even if you count this as a 1, 2, and then this 1, 2, still doesn't really fit, right? So I am labeling the dollar yen right here in this piece as a leading diagonal in this A, right? So right after that, we need basically another piece like this, right? The point is it finished? Is this finished in a running flat so it can actually go from here? I don't believe so. And the reason why I'm saying that is because the lower time frames actually point me lower. And if the VIX would spike, then that will mean, of course, the investors moving their attention towards the safe haven, which is one of them is the yen, right? And I'm actually expecting if that would happen. Personally speaking, I would expect the yen to have considerable strength, especially against the euro and against everything actually. And with it, gold gain strength as well. So we'll see if that happens. The only thing, as I said, the only thing that I'm wondering is, should this breach, right? Because if this is broken, this could confirm an expanded flat as well on this. Because if the breach would actually occur, the pattern would be like this, yeah? A, B, 1, 2, 1, 2, 3, 4, 5, and then 5. And then would be ready for this to actually happen. So still wait and see game, but I'm curious to see if the 100%, just like the previously mentioned, let's say crude oil right here, 100% was actually breached. Yeah, so we'll see what happens next. Now, with the yen, I'm actually curious to see what happens at the 100%. Should 110 hold, or if it's broken, then the next stage would be the 50% of A and 161.8, which is 108. But also 107, should this be extended, should the sell-off, if it even occurs, of course, if it would occur, if it would have and show an extension as well. Moving on, the DAX, right? Now, with the DAX, I mean, let me just finish with the yen, because right there, I've actually posted this, right? And it's exactly right there. So we'll see. It did drop, right? But we'll basically see more details. Now with the DAX, I was actually during that time when I was preparing the report, I was bearish on this, right? On the DAX, and it did indeed start the fall while the VIX actually bounced from the bottoms. And speaking of that, I will just go on the VIX before I go into indices, because this is actually quite important for those who are interested in the indices, right? And back then, I was even in my previously posted articles, I was mentioning this possibility for the VIX to actually start a spike, right? And it did start something, right? Now, I'm seeing this as the bottom, and if this would occur, then on the weekly chart on the VIX would reflect this type of swing, right? Or at least, I mean, on the weekly chart it's quite big, right? So at least this type of swing before it will even return to the greed and complacency period as well. So if this would happen, right? This rise would be very bad for the indices, causing a sell-off, right? And the patterns they do show that possibility. The DAX, the Nasdaq, the Dow Jones, S&P 500, etc. Right? So I'm seeing this as the first wave, and I'm seeing this as the correction. And if I am correct, then this would mean that the free of freeze will actually occur, right? And I know that this is quite scary, but it's an A, B, and then 100% is right there. It could be 161.8. We will never know. But we'll just wait and see. What I'm actually saying here is that this is indeed a possibility. And and it did bounce from the bottom. It is respecting every Elliott wave rule, and the way I'm labeling it is as I mean this correction. I'm labeling the spike in February in a free wave sequence, and then an A wave, and then expanded flat right here in the B, and then an ending diagonal in the C leg. So 1, 2, 3, 4, 5. And after this, of course, this could complete the B wave, and the C wave could be in play. We'll see. Nothing is 100%, but it is showing considerable signs. So now we're gonna go um, on the intraday, right? On the 2-hour charts, etc. But before I do that, let me just go on the previously posted article, my latest article posted on the August 9th, 2018, which I'm actually talking about some things, also following up on some previously posted articles and, expanding my senses and sharing my opinion and all this, right? And back then, the VIX was actually ready for the rise, and I was actually talking about this, and as you can actually see, right? And I was speaking about the possibility for the dollar to continue a rise which went higher than expected, but I was actually expecting a rise for this as the possible final leg, right? So this actually started. Now, as for the XAU USD gold, I was expecting more weakness, right? Before a reversal or something, a bullish pattern, and it did start, but same thing, gold as was actually affected. So while the VIX actually spiked, gold was indeed affected. It fell a lot, right? So this tells me that investors during this volatility period and the greed, sorry, and the fear period, investors are turning their focus towards the US dollar as the safe haven, right? But how much time will this last? Because the more gold goes down, the more appealing and attractive it is, right? As a safe haven asset. Same thing on the silver. So I'm actually suspecting. I mean, I was actually expecting more downside on silver towards 1475, which was actually hit, and I'm gonna go on I mean, follow up on this as well. As for WTI, I was expecting, let's say, for instance, after that, I was expecting a further weakness, just a little bit, and then corrective pattern to complete, right? We're still there. As for the euro, same thing. More downside, went much lower than I was expecting. I was actually expecting to 161.8 or 100%. Let's say, for instance, from WX pink minute 100%, and from A and B in a triangle right here. Um, I was expecting 161.8 for the C leg, right? Now it did go down, but the problem is it went lower than expected. Does that mean that the pattern is changed? Absolutely not, right? And I'm going to explain to you exactly why. Now, for the pound dollar, same thing. Correction, then more downside before a possible reversal. Dollar yen, corrective pattern right here, and then more downside. Dollar Swiss, again, a bit more upside, and then the downtrend to possibly start. As for the AUD, more downside towards 0.73, and then we'll see. It went lower, of course, but that doesn't mean that the pattern is not there. As for the Euro GBP, yeah, I was actually talking about this, possibly reversing somewhere around 0.9030, and I'm gonna go on the chart to actually expand on that. And also the USD CAD going up and then possibly breaching. And it is showing signs that that could actually occur, right? Now, for the DAX, I was talking about the possibility for a rise that did not happen. However, um, it did start falling. So it is kind of confirming more downside as the VIX actually rose, right? And Dow Jones as well completed right here and started making a mess, complex structure as well. S&P, same thing. But I'm gonna go on these indices and explain to you more. So previously I've been talking about 7,500 on the Nasdaq to be one of the points of interest and a possible um, wave, and the third wave, fourth wave, and possibly a fifth leg. This fifth leg, I'm not sure about it, but in order for this pattern to be completed, would need to tag the channel, right? The upper channel. So this will mean the last breath, last dying breath, let's say, bullish move before that, right? So let's go on the now let's go on the intraday charts right here. So I'm on the dollar index on the 2-hour chart, and back then I was expecting this move to actually start, and it did, right? But now that it happened, I am seeing a bearish divergence right there at the end of the fifth leg. So I'm labeling this as a 1, 2, 3, 4, 5. So we have a 5-wave sequence in this leg, right? The only question is this. Let's say, for instance, I'm labeling this as an A. The only question is how to label this, right? Because if I try to label it as an A, B, C, so A, I don't have a complete B, so in a free swings sequence, right? If I would label it as a WXY, wouldn't really make sense, right? Because pretty much this looks like a A. It's not a combination, it's a simple A wave. So A, B, C, 5-wave sequence. The only problem is that this move is going lower than the end of A, and this move is going higher than the start of this, right? So it's an expanded flat, just like that. It's a B wave. I'm labeling it as a B wave. So A, B, C. Doesn't matter because of that expanding flat and this going lower. The C leg, this small c, doesn't necessarily need to go beyond this, even though it went beyond the start of A, but not beyond this. So it's okay, right? And then started the bullish move. 1, 2, 3, 4, 5. So I'm suspecting because of this bearish divergence, I'm expecting, I'm actually labeling this as a 1, 2. I would expect a retracement, but should a bearish sell-off occur on the dollar, this could be quite big because remember, on the daily chart, the structure is quite significant, right? It only hit the upper channel, upper trend line from the channel. So I'm keeping this in mind as a possibility for the dollar to actually start a um, downtrend, right? Either it's a 5 swings sequence or a 3 swings sequence, that remains to be seen. I will be monitoring it as it unfolds, if it even starts. So far, it does look like the market is pretty much ready for some reversals. So I will keep on monitoring it, right? Now, next, the gold. Um, I'm quite, let's say for instance, I'm quite um, interested to see what happens here because should this be a triangle, then this would mean more downside, right? And the triangle will look like this. Now, the point is that if this is a triangle, one more, because a triangle usually occurs in a wave 4, right? On this type of impulse. Only occurs in the wave 4, never in a wave 2, in an impulse. So, of course, in a corrective pattern, it can actually show up in a wave B, in a wave X, right? But um, a triangle is a sign that the trend is ending, right? It's a struggle. Now, this will indicate that a triangle usually appears before a last move would actually occur of a completion of a pattern. So if this would occur, then I'm actually suspecting this Fibonacci extensions 161.8, but also from the major points, 161.8. So 1150 would be a very interesting level for the bulls. Now, how this triangle would be invalidated? As you can see, I'm actually bullish as we speak on gold, and I will actually tell you why. Because if a move would occur higher than this, because in a triangle would be A, B, C, D, E, right? For us to actually have this triangle. But if this move goes beyond the end of A, then the triangle could be invalidated, right? This means that this would be invalidated and we are in a wave 1, a wave 2, and this is going in the leading diagonal 1, 2, 3, right? So the reason why I'm doing this video now is I wanna get you guys prepared. I'd like to get you guys ready and prepared for the next trading week or weeks, right? For you to know what to possibly expect and what to look for, etc. And also share with you my thoughts as well. So let's go on the silver here on the 2-hour chart. Same thing as gold. The drop, this pattern is quite big to be labeled as a 4, so it can be labeled as an ABC. Remember, this is an ending diagonal, so could pretty much occur, it'll be labeled as an ABC as well. Okay, so the way I'm labeling it is as a 1, 2, 3, 4, 5, and silver. We know silver. I mean, you guys know how silver moves. I mean, when it moves, it moves. So wasn't actually expecting this to go so much, right? But that doesn't necessarily mean that the pattern is has been changed. No, this still remains a possibility. Moving on to crude oil right there. So the way I'm seeing crude oil is in a possible rise. I'm labeling this as an A, B, possibly C, right? So I mean, I'm labeling this B and in an expanded flat as well, like this. So if I do have that, if I will actually see that, then I will be comfortable to say that this chances would increase for the final sell-off. Now, the point is that 200% and 50% they actually align right there. So this is a point of interest, right? Not to mention that previously it did show points of interest, right? Back then when I was actually posting this on May 17th, right? When I actually started to fall, but also posting this as well on those after the breach of the ending diagonal, right? To actually start. So right now, I think crude oil, if the dollar would lose value, it would actually be you know, it would actually be mean that WTI could gain a little bit of strength, at least short term. Because what I've noticed is that when the VIX spikes, the US indices and WTI are vulnerable, right? So I'm suspecting that if the dollar would actually, um, sorry, if the yen will actually gain that strength, I'm thinking that um, gold could gain strength with it, and this time during this VIX spike, things would be different in a sense that the dollar would not be treated as the main safe haven asset, but gold and yen most likely, right? This means that the euro could actually have a real chance right here for this, right? So remember what I said about this fractal pattern right here, and the way I'm labeling this Euro USD on the 2-hour chart is in a W and then a complex double free in the X wave turquoise minor, right? So W X, this pink W, pink X, minute, pink W X Y. So the Y wave is unfolding in an A triangle right here, running triangle in the B wave, minuet orange, and then the C leg, the powerful impulse. 1, 2, 3, 4, 5. Now there is a possibility for this free to be right here. Yeah, should this be an extension? And I'm suspecting that, right? So this is what it means. This is what it means to be prepared for everything. So should this be a 4? Because I don't really like the way it's going on, unless it's a leading diagonal and we have a second wave. But if I do see a zigzag in this second leg, this could possibly confirm the second wave, so wave 2. Now, if this is a fourth wave, then this means that the fifth leg should resemble wave 1 in duration and in length. So this is wave 1, right? So this would go around here. And I'm suspecting 161.8 now because 100% was breached. Yeah, remember I was actually expecting 1.145, but it did go lower. So 161.8 is the best interpretation right now. If the euro would have one more drop, if the VIX would actually spike, and then of course this could be treated as a point of interest for bulls. Now, if that occurs, right, then this could complete the pattern for X, and the Y wave could be in play. However, what if it actually starts now, right? So this could be the one. I'm curious to see the correction. So in the next week, let's say I would be looking for a zigzag right here, zigzag correction or a bull flag, and to possibly confirm the upside. And the reason why I'm saying that is because if I go on the pound dollar on the 2-hour chart as well, this is a very complicated structure because it is labeled in an ending diagonal in the descending channel, right? So we have let's say all the way down here 3 4 and then the impulse 1 2 extension 3 1 2 3 4 5. So 3 4 red, minute degree, and then the fifth leg. Notice that the fifth leg meets the rules, so it does resemble wave 1 in duration and length, right? So we have the extension wave 3. Therefore, it only leaves me to think that an impulse could actually occur. But the way this actually started, I don't really agree with it, right? However, wave 1 is known to be choppy, right, and difficult to decipher. Hence the reason why um, an analytician needs to be ready. So we do have a bullish divergence right here. This is an excellent side at the end of the fifth wave, right? And wave 4 should end its last swings in the price action territory of a previous 4 of a lesser degree. So this is the wave 4 over a lesser degree, right? So if this is an A and this could be a C leg could occur, making this a pattern as well for a fourth wave. So this means that obviously somewhere around here I mislabeled this and there's one more downside, hence the reason why I have these levels right there. So on the pound dollar but also on the euro, you guys can actually see that 1.125 would be in focus, but previously, I mean until now, 1.132 was in focus and it did actually work out, right? So right now I'm actually at the previous break-even point at 1.141. Now, moving on to the dollar yen, the way I'm labeling this as an impulse, right? One in minute red, and then ABC in two. So meets the rules, retraces 61.8 of wave 1 and then a leading diagonal right here. So I'm labeling this basically in a wave 1, 2, 3, 4, 5. This is obviously minuet scale, right? So what I need for this to occur is as you guys can actually see, I was actually posting that as well. So retracement, then more downside possible. Now, the way I'm looking at this, let's say for instance, kind of meets the rules for the yen to gain strength because wave 1 happened. Wave 2 retraced 61.8, same like I did right here. and now this retraced 61.8, also hit the 50% of the previous fibs. Also has a occasional head and shoulders formation right here on lower time frame. So it's promising for the downside, I would say, right? So this is actually a good sign for the for metals, correct? Moving on, dollar Swiss. There's a very complicated structure on dollar Swiss right here, and the way I'm labeling it in short is as a W, and then all this in a triple free in this X, because this is a double free, and sorry, it's not a double free, it's an ABC, but it is a complicated structure due to the fact that this was corrective, this was corrective. Everything pretty much is corrective on this, right? So complex structures are actually occurring on the dollar Swiss. So the way I'm labeling this one is, let's say for instance, yeah, right here, okay? I'm actually labeling the dollar Swiss in a triple free in this X. So this would leave me to think that this could actually start, right? A bearish sell-off. So remember what I said about the dollar index possibly starting a downtrend, right? Moving on to the Aussie dollar, right? Let's say for instance, it did go lower than expected, right? So point is, I'm labeling this correct in a corrective P. So we have an A, then a complex W, X, A, B, and then the sell-off, the C leg, right? So I actually have a sorry, WXY in a double free, WXY for this B. So we have an A, B. What's left is this C. The question is when, right? So for that, we just measure the fibs, 161.160, 150, 161.8, sorry, and then from A to B, we measure 200% and 261.8. 261.8 is actually syncing with this, and it did exactly, it did bounce exactly at 0.7200. Okay, so the way it's going up, let's see how it's going up now. The way I would like to label this, right, is in a 1, 2, 3, 4, 5, in a sense like this: 1, 2, 3, 4, 5, because this went higher than this point, this did not, so it's a running flat in a fourth wave, leaving this a fifth leg to resemble wave 1. This also meaning that a bearish divergence would um, be nice to see at the end of the fifth leg. And this, guess what? The bullish volumes are not yet consistent, right? Leaving me to think that, let's say for instance, if I would measure wave 3 with wave 4, yeah, so 61.8 will be the default measurement, right? Leaving me to think that 61.8 could be there, and it's exactly at the previous breach, 100%, 161.8, so it is indeed a good resistance. Now, how much would wave 2 retrace, right? Like this. Well, we just use, let's say for instance, from this levels towards the 61.8, we just use this default 61.8, which is somewhere around 0.7240 as the next best interpretation for the bullish run, if it even occurs. So as you guys can actually see, multiple signs are pointing towards the possibility of the dollar softening, right? So we'll basically wait and see. Now as for the New Zealand dollar, same thing, same pattern as the Aussie. Yeah, so the Kiwi, the New Zealand is actually showing an A, B, 1, 2, 1, 2, 3, 4, 5, 3, 4, 5, right? Divergence right there. and it could be actually starting. Same thing as the dollar, sorry, Aussie dollar, right? Could be already in a wave one. As I said, wave one is usually choppy, doesn't really give you a proper impulsive move, like doesn't smack you over the face with something like this to for us to say for you to say like it is there, I see it, it's happening, right? So it doesn't really give you that. The third leg third leg would most likely, I mean, most of the cases is doing that, right? Moving on um, to the DAX. Now on the DAX, I'm already labeling this in an extension 1, 2, 1, 2, 1, 2, 3, 4, 5, right? So basically, the free of freeze is already occurring. So right now I have the sub minuet right here, light blue, 5 of free. So I would expect more downside, corrective, fourth wave to retrace in the previous 4 over a lesser degree, which is that, right? And then possibly more downside. And the reason why I'm saying that is because remember what I said about the VIX, right? If it does start spiking, then US indices could actually start a bearish run. And remember what happened to DAX in early February. Remember what happened to Dow Jones, S&P 500, and Nasdaq, and all global indices actually. Some of them, especially the um, Japanese and China, are have been heavily hit by that wave and are still continuing right now, even though the US indices are remaining, let's say, for instance, in standby mode. But how much time will they stand like this, right? I'm gonna go on them and we'll basically see more details, right? So, I mean, on the DAX right here, I was actually expecting more downside, right? And it did actually occur. Now, the point is, how I'm labeling this, last fifth leg is wave 1, 2, 3, 4, 5. Remember that a bullish divergence could push this fourth wave. Would expect this fourth wave to occur while the VIX would correct on the downside, right? So things are kind of linking, syncing, right? Let's move on. Now, dollar CAD. Remember that actually I was actually mentioning this in the previously posted article to for dollar CAD to possibly start a breach right there, yeah. And would like to actually mention something here because the way I'm labeling this B wave is in a triple free WXYXZ, but it can also be labeled in an A, B, and this being an ending diagonal right here in a 1, 2, 3, 4, 5. So which setup would be more, possible? Well, both of them, but the only thing, the way I would clearly, know better is if this bounces off right here, then this means that the next trend line would be treated. So this is why I'm ready with the 1.36. Now, until now, I was ready, of course, with the 1.31 on this, yeah, right here. 1.31 started dropping immediately from there, and from 1.33 which started dropping immediately from there. But let me show you something else, because I like the USD CAD. The patterns on it are quite clearer than others, and I will actually mention why. Back then on April 23rd 2017, so 1 year and almost a half ago, right? um, I was actually bullish from 1.338 up until 1.38, and then bearish from 1.38 all the way down, right? So let me just load the new bars and you guys can actually see. So it went up from there from 1.338 until exactly 1.38, and it started dropping 1,000 something pips, right? 1,700 pips. Right then, after that started correcting. I left it alone, right? Just for me to have a pattern. I did have a pattern right here, an AB equals CD. If you don't know what that is, it's the following harmonic pattern. AB equals CD, right? It's this one. Okay. Now, when I had that pattern, I posted this idea, right, for the bearish run to actually start. However, it did jump again, right? And this made me think that an ending diagonal could be a possibility in the C leg. However, right, if this actually breaches through, then the best scenario, the best interpretation would be the current one, right? In a triple free in this B. So this meaning that the B wave, the red B minor, already completed. So this would mean that this could be placed in a 1-2 and an extension, 1-2, and then the free of freeze in a bearish sell-off just like this. So hence the reason why I'm not uh, deviating, going back on my analysis right now. The only way, I mean, I would like to see a breach right here, a retest, and then, of course, I mean a bearish flag or something, a bear flag or something, right? Let me just move on. Now, in the previously posted video, I've been explaining the USD CAD, but also the Euro JPY, and take a look what happened from the time that I posted that video in which I'm explaining this bearish bat, right? It did start falling right there, yeah. So it actually fell. It actually fell almost 700 pips, right? And I'm seeing more downside on the euro yen. Not against, I mean, not euro against the dollar, but euro against the yen. And the reason why I'm seeing that is because of the VIX spike and the strength, possible strength in the yen, right? So I'm labeling this. I'm seeing an extension. Sorry, 1-2, yeah, and then 1-2, 3, 4, and then this to continue for the fifth leg, making this a free. So 1, 2, 3, then the correction to occur in the 4. More downside, of course, after that, if this is actually an impulse. But as you can actually see, I'm labeling this as a primary W and then X. So this would be the A, then the B, and then the C. The way this unfolds, I will have more details, but until then, I'm just going with what I have. But the point is that this actually happened, right? Now next, the Euro GBP, in which I've been actually talking about that possibility. And let me just zoom in and actually show you something and show you the power of the Fibonacci extension. So I was actually measuring 1 with 2 for the completion of 5, right? But somewhere around here, I this could be 1 2 3 4 and then 1 2 3 4 5, and that's it. 200% was it. But the point is that 200%, I was having a level right here, 0.9030 as the possibility. And notice exactly at the 200% started dropping. Amazing, right? This is the power of the Fibonacci's. And also, should this be correct, then the fractal pattern with the Fibonacci would actually work nicely for the euro. So let's just jump back to the VIX, because this is the main attraction for me right now. To be honest with you, I'm very curious to. I'm monitoring it. So I would actually see on the VIX this being a corrective pattern. It can actually start anytime it wants, right? Because let's say, for instance, already hit 50% minimum retracement for a wave 2. If it does hit 61.8, it can even hit 78.6, but under no circumstance can it go beyond the start of 1, right? So it can go any point, but the more it goes down, the more the indices would rise. DAX is not showing that possibility. So let's take a look at the US indices, right? And on the US indices, let's say for instance, I'm on the Dow Jones here on the 4-hour chart, and the way I'm labeling this is in a triangle I know this went higher than the trend line, but the wave E usually surpasses, I mean, breaks out of the um, triangle before the change would actually occur. Another possibility to treat this would be in a flat correction, yeah, in which case 100% Fibonacci extension would be the view, right? But the problem is, if that would be the case, then this would be left in a C leg in an ending diagonal, but the way it looks is not really an ending diagonal, right? So rather it's a complex triple free, so W, X, Y, X, Z, or just leave it like this and just go with the triangle A, B, C, D, E. In any case, this could be labeled as a free one, ABC, right? So we do have an A, B, C so far, but if the Dow Jones would be destined to hit 100%, which is actually around 26,000, more exactly 26,050, yeah, as the level. So in which case this B would be here, and we are actually in an impulse. It does look like an impulse though, right? So in which case would move this fib right here and have the 61.8 right there at 25,850, right? Now remember, because in a flat correction, because this point did not go lower than this point in this type of flat correction, um, the C leg and the end of this B would need to go higher than this point, right? So anytime this goes higher or even reaches, let's say for instance 25,816, yeah, the pattern can be considered as complete, and the C leg could start any time it wants. Hence the reason why I have multiple boxes right here, which were actually in focus, right? Right there. You guys can actually see. So I'm actually curious to see what's happening or what will happen in the next trading days and weeks. I mean this week actually, because the VIX is on the 2-hour chart, doesn't need too much time to hit the 61.8 or hit the bottom for wave 2. So things are becoming beginning to be quite interesting, I would say. So let's move on to S&P 500 on the 4-hour chart, and this is not labeled in a triangle. This is actually labeled in a flat correction, right? In which the February spike on the VIX caused the major sell-off, 350 point drop and on the S&P and 3,500 points on Dow. So this went down a lot, right? This represents the intermediate A red, and then the corrective actually started in a double free WXY, purple minor WXY, thus completing obviously intermediate B, right? And I'm suspecting because the 100% was actually met, so this indeed can drop anytime it wants if it's even destined to deliver that C, which I pretty much think could happen. Now, this is my personal opinion. Let me just say my personal opinion here. I am actually expecting VIX to cause a spike similar or stronger than the one witnessed in the February 2018, which would lead me to say that I'm actually expecting another bearish, another sell-off on the US indices. Yeah, I said it. Now, the point is, everything, as I said, everything is that I'm saying is just to be treated as a simple market commentary, not as an investment advice, okay? But I'm sharing my opinion here. So the way I'm labeling this intermediate B right here is in a, as I said, in a double free purple WXY. So WX and then the Y, I'm labeling it in a triple free because this is correcting this and this is correcting this. All of them are corrective legs. So multiple corrective pieces actually occur right here. Hence the reason for this triple free occurring in a rising channel. Now what I'm suspecting is, should the should the indices cause um, one more cry for help, let's say one more rise, yeah, a new all-time high could be very dangerous for S&P, which is somewhere around 2585, right? However, due to the fact that it already met the 100%, yeah, what about this? Can this be the one? Can this be the two? Can this start? That depends on every trader, right? But um, what I'm looking at is the main picture, right? So I'm looking at the main picture, and the main picture for me is the downside. And let's say, for instance, I have these boxes right here, okay, in which I was actually mentioning them in my previously posted articles. You guys can actually find them on the Orbex blog. Now, I was actually explaining these boxes. So the the one on the top represents some sort, I mean, like a conservative point in which 2875 would be in focus for more of a conservative type of traders who are looking like a for an ultimate confirmation, which would, in my opinion, would be like 61.8 right there. But this, if this is a running flat, this will go even a little bit higher to 2900. That's a sentimental level. Not sure it's gonna provide that because it's rather obvious, right? But um, yeah, so that's the conservative box, let's say. The moderate box was somewhere posted somewhere around here. Yeah, right there. So following up on that, and I've been talking about this for quite some time now. Okay, so the point is that pretty much we do have divergences all over the place right here, and conservative, let's say for instance, a confirmation, let's say for instance, would come if a breach of this trend line would actually occur, right? So the level would be 2785, lower than this points, of course, yeah, in which case it would drop if it's even going to provide that correction before continuing on the downside, right? So we'll see which scenario would occur, but as I said, my main view is for the downside as we speak, and this could actually start anytime at once, as I said, right? Nasdaq. Now the Nasdaq is pretty interesting because it's actually sitting somewhere um, on the edge of the cliff, right? And I was looking at Nasdaq as the leader for the US indices because I've explained this before. While let's take a look right here on the let's start with the Dow Jones, right? I mean, Dow Jones created a all-time high back in January 2018, at the end of January, and then the bearish, I mean, the sell-off started, right? So since then, while it corrected, we have a higher low, lower high, higher low, right? And then S&P 500 is showing, I mean, from the all-time high, is showing higher low, lower high, higher low, higher low. But the Nasdaq, so from the all-time high back then in January, at the end of January, all-time high, then all-time high, then all-time high, then all-time high. Right? I know. So this leads me to think that the tech sector is somehow leading right here. Right? But what happens if this could breach this? A very, very important trend line right there. Very important trend line. No, I cannot emphasize how important this is because even if this free right here, yeah, if this correction would be the 4 and then this be 1 2 3 4 5, still something is ending right here, right? This me leading me to think that this is a 1, ABC 2, Yeah, one, two, three. Who knows? What if I'm right? I mean, we never know. But anyway, what I do know is that same the boxes right there is 7,500 was my focus, one of them, right? And it um, did go right there, and you guys can actually see how precise these fibs are, right? It's amazing, right? If you know how to use them, of course. So the way I'm um, labeling these things is, let's say for instance, I'm measuring the fibs. This swing with this swing, the 100%, this swing with this swing, 161.8. I'm also prepared for the 200%, right? But that wasn't 161.8 is enough, to be honest with you. And then the swing with this swing, the 61.8, then exactly there, boom, started dropping. So what's next? Now, what I'm suspecting is this to be the top. I mean, it did not go higher than 7,500, therefore could be a wave 2, and this could mean that Nasdaq is already in a sell-off. One, two, one, two, three, right? Or this is the one, two, and then one, two, and then this is indeed the three. Regardless of the scenario, the point is that it's sitting in a very dangerous zone. I do believe, and I'm gonna say this, I do believe that it's about to enter a bearish territory. But again, this is my personal opinion. This is not to be treated as I mean, not to make a decision or something like that. I'm just sharing my personal opinion here, but I am expecting this. Let's just make this clear, okay? Regardless if it goes higher, as I said, as I mentioned, yeah, still the pattern needs a correction. The US indices, they do need a correction, okay? Because this cannot be the entire correction for a wave 4. This is merely the first leg. It's only a matter of time. And again, in my personal opinion, guys. Okay? So let's just not make this too complicated. I was actually posting these things and you guys can actually see them. Um, yeah, so that's pretty much it. Just to make a summary right here, let me just go back on the daily charts. Yeah, so what I would expect is, in short, as a summary, very volatile week ahead. So hence the reason, of course, why I'm recording this video for you guys, so you guys could be ready for what could actually occur. Yeah, for the scenarios. Right. So that's about it for today. So as a summary, I would expect the dollar to actually start this downtrend, no matter if it would end somewhere around there or not. I would like to see the breach, to be honest with you, so we can actually get this corrective pattern over and done with, because this was a pain. Yeah. So I'm also looking at the possibility for the metals to bounce in a corrective pattern, on euro as well to bounce, on the pound to bounce, on the dollar, yen to breach on the downside, and more weakness for DAX ahead. Notice that DAX is actually going towards a very important trend line, but just like gold could actually do that as well. Okay, and this is because a wave 4 of this type of degree, this is a cycle wave 4 green. A wave 4 typically breaks um, the trend line, and by trend line I mean this trend line, breaks the trend line before the um, the continuation, just as a tip and something to keep in mind. All right, so that's about it for today. I hope this information was useful. I hope it will be useful to you when making a trading decision. So until next time, as I like to say to all my traders, stay in the green and many pips ahead.